Alright guys, welcome back to Narex FX channel. So today I'll be talking about fair value gaps and using this particular trade as an example, then I'll tell you guys everything I did that make this trade work out. So let's go back to the chart guys. This is what I was doing. We are in New York session, right? So I came to the chart around New York session, that's 1:30 p.m. and on the 1 hour time frame guys. Let me just zoom in so you see where we are right now. So I was around here, this bullish candle, that was what I met on the chart, this bullish candle. So I made this bullish candle on this chart and I zoomed in on the 1 hour. This is what we have. We have formation, this bearish formation. Like if you go down to the 15 minutes here, let me take it down to the 15 minutes because on the 1 hour I saw that price swept liquidity below this low, tapped into this other block, then took out inducement here. Let me just explain it using the 15 minutes. You will get to see everything clearly. So this is the 15 minutes guys. This is what we have here. This is a liquidity pool and we have another block here. So price did what? Filled up this other block, like mitigated this other block, took out liquidity, and this is an inducement. This place was like a liquidity created, so price ran into the inducement, yeah, and also reacted to this very other block, this last other block. Now after that, this was what happened. So as price reacted to this other block, we expect to see price, either take out liquidity more, but here already filled up this imbalance. So even if price does not trade above here, it's still okay because here filled up this imbalance here. So here filled up this particular imbalance. So we took out inducement here. So this liquidity above here was the liquidity I needed to start selling. And when I came, price was about around here. Now price was around here, so I zoomed in and this was what I noticed here on the 1 hour time frame, or on the 15-minute time frame at the New York session. Now there's something about trend, there's something about trading with time zone like Asian, London and New York session. So when you're trading with New York time, you know that New York time is more like a continuation of the trend of the day. So if I should bring out today um range, let me check here if I can bring it out. So this is today's range. Now you have that in the London session. This is today's range, and if you see here, we have that in the London session. Price, went back to this other block here. I hope you are really getting what I'm saying, because this move now happened here yesterday, not today. Sorry, let me explain. So this is yesterday move now. Yesterday's move was the one that took out liquidity below here and pushed up to take out inducement. And now if you check around here, around this particular place now, around this place, after taking out this inducement, reacting to this other block, we have a shift here. So we already had a okay, look at it here on the 15 minutes. So on the 15 minutes now, we have a shift here telling you that we are now bearish. So this is the shift here. This is the last low that created that high. So the last low that created this high. So this is the shift here now. Where do you expect price to go to? Around here. And this was what happened in the Asian stroke. In the Asian section, we shifted below, making this today range a bearish move. I don't know if you are really getting what I'm trying to explain in context that we kind of do a trend continuation on the New York session. While in the London session, we create the trend for that day. That's the range for the day. So this is Asian section here, beginning of the day. Market shifted downwards and New York session retraced down to the other block. So sorry, London session retraced down to this other block. So New York session now is coming to continue the trend of the day. Now we know we are already bearish. So this is it. So let's continue in today's range. Now I did something here. I noticed that price broke below London's low. Yes. So we had a break of structure here, not even a shift in market structure, a break of structure here. So this is telling me that we will be bearish throughout New York session. And now once you have a change of character within New York session, you just have to continue to trade with that trend, because this is more like a time where much people come in to trade, so they can either cause a change in the market or they follow the trend of the market. So this is a new period and people are already in the market, like it's a new session, and they've already caused a change around 1 o'clock, 1:30 period. So now we are now bearish again, like we are confirming our bearish move after we had our shift in market structure. We've done everything and we are now bearish. So what do? You look for a good entry, like they call it OTE, optimum trade entry. That's what most ICT concept traders call it. So this was what I did here. I quickly came down to 15 minutes and I was seeing an imbalance. Wow, which is very, very nice, because having an imbalance after a break of structure is everything you just want to see to get your trade. And this is it here. On the 30 minutes, I just came into this imbalance here. See the last three candlesticks here. One, two, three. And this is the like fourth one. Or you can count from the smallest, one, two, three here. Let me zoom in. So in this three, let me take it out and just do everything afresh so you can really understand. So in a three candlesticks, you want to see a gap where the 2 weeks does not join together. That's an imbalance. Like that's an unbalanced price action. So this is it here. I'll be drawing it from here to here. So that's it here. So this is the first candle, second candle, and the third candle. And you can see this gap. This is where this first week stop and this other week. And it was around New York time. So now this is it. We want to see price retrace down to the imbalance and continue selling, because we already have confirmed that we are bearish. So that was what I saw and I just took the trade. And I took the trade, guys. Nothing much, nothing complex about the strategy. Just know your trend, know what you're doing, and that's everything, guys. So that was how I got this setup. So even if you go to the 5 minutes, guys, you see it was just a short retracement down. A short retracement. See, you have a break of structure here, and price came down a little bit and retracing to this imbalance here. So that's just it. That's it, guys. So trading with New York session and London session, all you just have to know is just to look out for where liquidity has been taken, and look out for your point of entry, like your confluences you have in the market, things you want to see happen in the market here. So that was one of the things I wanted to see price come back to this imbalance and take me in. So I took my trade. I'll be posting a reels where I was scalping this buy. I scalped this buy down to this imbalance. So if you see there, I closed the trade when I was already in the imbalance and I sold from there. So that's just it. Just know your market structure to help you avoid unnecessary, stay in the trade or in the market. So that's just it for today. Please do well to subscribe to my channel for more videos. So that is it on fair value gaps, taking fair value gaps with or in a particular time session. Like, I don't really know how to, put it, let you just understand. But with once you are trading in a particular time session, you just have to look for many other things that can really make this trade go. So that was it. We already took our liquidity in the London session. Yeah, took our liquidity here and retracing to an imbalance. If you check 30 minutes, you see that here was like a fair value gap. So it's still the same thing. You're trading with time. So just like I traded this place now using this imbalance, most people took their first entry here during the London session in an imbalance. That's this FVG here. You can see three candlestick formation. We have the first one, we have the second one, and we have the third one. And see how price went back and filled up this imbalance here. Just like how price came back and filled up this imbalance here. So you should see how price always respect the fair value gaps here. So it's really, really important to know how to trade using the fair value gaps as a trader, guys. So I'll be calling it my last. Okay, this should probably be my last video for the month, and maybe next month I'm planning on starting a kind of challenge where I'll be creating a Telegram group and I'll add some of my favorites, should I call it, my subscribers are willing to join, then we're doing like a challenge, a $20 or the $10 challenge, 10 to $1,000 challenge. Now, I may not really know how it's going to go, but when I'm ready, I would like post the link under the description of any of the video I'll use to inform you guys. So do well to subscribe, share to people who you think are finding it difficult to understand some trading concepts, especially those interested in ICT concepts. So this video might be really what they need to understand ICT. So thank you for watching to the end.